Passive income, the dream of earning money while you sleep. But have you ever wondered how much you actually need to invest to get a steady cash flow from dividends? To earn 500 euros, 1,000 euros, or maybe even 10,000 euros a month? In this video, we're going to crunch the numbers. We'll use real-world data from the past 6 years to see exactly what it takes to generate passive income with different types of ETFs. And stick around, because we'll also bust some common myths about dividend investing that could save you a lot of money in the long run. Before we dive in, remember that building passive income starts with the right foundation. You need a good brokerage account, and some even let you automatically reinvest your dividends, which is a powerful tool for growing your wealth over time. So, how did we calculate all this? We analyzed for popular ETFs from the end of 2018 to the end of 2024. First, a classic distributing global ETF, the iShares MSCI World. Then, 3 different dividend-focused ETFs, the iShares MSCI World Quality Dividend, the Vanguard FTSE All World High Dividend Yield, and the VanEck Morningstar Developed Markets Dividend Leaders. We'll look at the dividends they paid out, but crucially, also how the total value of the portfolio grew. Because, as you'll see, a high payout often comes with a hidden cost. All our numbers are gross, before or any taxes. Let's start small. With a 10,000 euros investment, if you put that into the standard global ETF, you would have received an average of 204 euros per year in dividends. That's about 51 euros per quarter. Now, let's look at the dividend ETFs. With the same 10,000 euros, the quality dividend ETF would have paid you an average of 370 euros a year, or about 31 euros a month. That's almost double the cash flow. But your final portfolio value would be just 15,742 euros. See the trade-off? You get more cash in your pocket today, but at the expense of less overall growth. Moving on to the Vanguard High Dividend Yield ETF, the payout is even higher, averaging 413 euros annually. But the total portfolio value is even lower, at around 14,736 euros. This is a classic example of high-yield stocks trading income for growth. Finally, the VanEck Dividend Leaders ETF offered the highest payout of the bunch, with an average of 568 euros per year, or 47 euros a month. Its final portfolio value was a bit better at nearly 16,000 euros. So, while the dividend ETFs give you more cash flow, the standard global ETF was the clear winner in terms of total wealth creation over these 6 years. Okay, let's increase the stakes. What if you invested 50,000 euros? Using the same performance data, the global ETF would now pay you around 1,020 euros a year, or 85 euros a month. The dividend ETFs start looking more interesting here. The quality dividend ETF would give you 1 year, 852 a year, or 150 euros a month. The Vanguard High Dividend, 2,063 euros a year, which is 172 euros a month. And the VanEck Dividend Leaders would provide the most cash flow at 2,840 euros per year, or 237 euros a month. At this level, the payouts are becoming more noticeable. It could be enough to cover your phone bill, streaming services, or a nice dinner out each month. But it's still not quite life-changing money, is it? Now things get serious. Let's see what happens with a 250,000 euros investment. With the global ETF, your annual payout would be just over 5,000 euros, or about 420 euros per month. Time for the million-euro question. What if you invest 1 million euros with a global ETF? Your annual dividends would be about 20,300 euros, or roughly 1,700 euros a month. Not bad. And your total portfolio would have grown to an impressive 2.17 million euros. Now, for the dividend ETFs, and just for fun, let's imagine the luxury scenario, a 3 million euros investment. With this amount, even the standard global ETF would pay out over 61,000 euros a year, or more than €5,000 per month. You could comfortably live off that. But if you went for the highest paying dividend ETF, the VanEck fund, your annual gross income would be a massive €170,000. That's over €14,000 per month. At this scale, you are well and truly financially independent. Of course, getting to €3 million is a long-term goal for most, but it clearly shows the kind of capital required to achieve that dream of living entirely off passive income. Now, before you rush off to buy a dividend ETF, let's talk about the hidden truth behind dividends. First, dividends are not free money. When a company pays a dividend, its share price typically drops by about the same amount. You're not getting extra value, you're just converting a piece of your investment from a stock into cash. Second, you can create your own dividends. If you have a reinvesting ETF, which automatically puts dividends back into the fund, you can simply sell a small portion of your shares whenever you need cash, with low broker fees today. This self-made dividend strategy achieves the exact same result. What truly matters is the total return of your investment, the capital gains plus dividends, not how you receive the money. Third, dividends fluctuate. They aren't guaranteed and can be cut during tough economic times, as we saw in 2020. This makes them risky to rely on for fixed expenses like your rent or mortgage. It's smarter to use dividend income for variable costs, like travel or hobbies. And finally, don't forget taxes. All the numbers we've discussed are gross. You'll have to pay taxes on your dividends once you exceed your tax-free allowance. So, after all that, how much do you actually need for your passive income goals? Based on our analysis, to get a steady €500 per month, you'll likely need between €150,000 and €300,000 invested, depending on your ETF choice. So, what's the key takeaway here? Dividend ETFs can feel great. Seeing that cash hit your account is very motivating. But don't get blinded by the payout. The big lesson is that a higher dividend often means lower long-term growth. For most investors, focusing on total return through a diversified, low-cost global ETF and creating your own dividends by selling shares as needed is often the more effective strategy for building long-term wealth. Dividends should be a component of your financial plan, not the entire strategy. If you found this data-driven comparison useful, please give this video a thumbs up and subscribe to the channel. We regularly post new videos to make the world of finance and investing easier for you to understand. Thanks for watching, and I'll see you in the next one.